Okay, welcome back. 30 points on the Nifty. So 23,770 is where we are trading at. Happiest Minds is the next management on the show, where the company reported a soft set of third quarter numbers. My colleague Reema Tendulkar caught up with the company's MD and CFO, Venkatraman Narayanan, and Executive Vice Chairman and CEO, Joseph Anantharaju, began by asking them about the quarter gone by and how they see growth going ahead. Listen in.
When we started the year, I had given a forecast or not a guidance of 30 to 35%. That was the number that we had given out in growth in constant currency. And that was assuming that we will get the full credit for the consolidation coming in from Pure Software, Marius, and Macmillan. But, unfortunately, it took some time to close those transactions, and we only got about 40 days of the revenue benefit from those transactions. So that impacted us, and which we did highlight in the earlier quarter, considering that we will continue to try to see how we can make the 30% number, which is the lower end of the forecast that we had in terms of growth. Compared to that, we have done about 25%. I would also like to highlight that all the two quarters, which is Q2 and Q3, we have done 27 to 28% growth year over year. So that shows that, this was just a little bit of a miss in terms of the consolidation benefit and the mathematical addition that we got to do because of the number of days in the first quarter that we got from the benefit. So that's a math behind that growth number. Despite that, like I said in the last quarter, we are trying to meet the 30% number. We have now made a good consolidation in Middle East. That plus the organic growth that we're seeing in Q4, we should hopefully try to hit that 30% number or at least come reasonably close to that.
But organic revenue growth, just quarter on quarter, is I think close to about 0.8% in constant currency terms. Are you anticipating an acceleration, Joseph, in Q4, as Venkat was pointing out? And give us a sense of the demand environment now.
As you know, the Q3 typically tends to be a seasonally tough quarter because of number of working days, people availing of leave, which usually knocks off around 3 to 4% of growth. And this quarter, we also saw a few of our customers in BFSI, which has become a much larger portion of our revenues, having furloughs and forced leaves. So that impacted our revenues. But overall, I think the demand environment looks, as I shared last time, post the election, there seems to be more optimism, and most of our renewals for the year have gone through. We have a pretty strong pipeline based on three factors. One is our GenAI business unit is beginning to see customers move forward, I would say, from POCs to larger implementation. So we have two customers who finished the POC phase in Q3. They've signed larger 6 to 12 month deals for doing production implementations. Our chief growth officer and his team have come together, and we're seeing quite a bit of traction in terms of NN pipeline with 2 or 3, one customer already closed and a couple of them very close to signing. And this team just came together in November, December. So that's again heartening. And the third factor is the verticalization. I think the whole structure and approach to go-to-market has taken root, and we are seeing an improvement in pipeline, both in NN and in existing customers. Overall, I think we are very optimistic about Q4.
Venkat, let me pick on one of the points. That's the generative AI. And correct me if I'm wrong, but did your generative AI business unit see a revenue decline of 4% on a quarter-on-quarter basis?
In rupee terms, yes, we have. It was about 8 and odd crores last quarter, and we have maintained a similar run rate number, 8 and odd crores. That's got to do with conversion of some of the POCs into real projects that are full-blown projects. But yes, we have. It is, I would say, remained flat at about 8 crores over the last 3 quarters. We have done 25 crores for the first 3 quarters of the year.
Do you want to put a number to it? What generative AI could contribute to your top line by the end of FY26? And also talk to us about the 60 basis points margin decline. And do you hold on to your EBIT margin guidance of 20 to 22% for this year and next?
Yeah, as far as the margin is concerned, we are holding on to the 20 to 22%. If you look at the 9-month number, we are at 22.1%. And our margins are, despite the investments that we continue to make into Gen AI. Gen AI is a startup unit within Happiest Minds today. We are making investments into Gen AI. We are making investments into the new sales engine that Joseph referred to. After accounting for that is what our EBITDA number stands at about 21.1%. We would like to maintain it ahead of the 21.1% for the year, and also ahead of the 20 to 22% that we have given as a guidance for the year. So on the margin front, yes, any turnaround that we will see in generative AI business is going to really affect us very positively. As far as generative AI becoming 10%, taking off from where Joseph talked about how we are seeing growth in that business, this generative AI becomes, as we mature, I see that becoming more an integral part of the verticalized offerings that we give. So today, we are looking at offering generative AI into Artha banking services. Going forward, I'm not very sure how I'll be able to split it. There will be an attempt that we made, but what happens is generative AI becomes that differentiator for our products and services to go into the market.
Running out of time, so very quickly, Venkat, are you back to scouting for more acquisitions, since it's been over 6 months since you closed the prior two, and M&A is an integral part of you? And another quick word on your average revenue per customer. Do you see it hitting $1 million mark by the end of FY26, next 12 months from now?
Though not an acquisition, we did disclose a consolidation deal in the Middle East. We have acquired the entire Middle East business of GATS Technologies. This was announced a couple of days back. It was during our silent period, so we couldn't do much of press release and announcement. But that's added to our Middle East presence. Middle East, we are welcoming about 90 plus people in the Middle East market. So that's a reasonably large addition for us, because we have traditionally been 100% offshore. And most of those customers are in the BFSI segment and within the IMS SBU. So as you will see, we continue to keep doing business addition through acquisitions or transfer of business or consolidation. That's in progress. As we look into the new year, yes, we will continue to scout for new deals and raise capital as required as well if it comes to that.
Okay, all right. That is the latest from Happiest Minds at the end of the third quarter. With that, we have to get back to the markets. We have Mitesh